welcome to the deep dive. Forget the water cooler gossip. Today we're diving headfirst into something far more telling about the current economic climate. Walmart's upcoming Q1 2025 earnings report, it's hitting us this Thursday, May 15th. Think of this as your shortcut, really, to understanding what this retail behemoth's performance could signal for your wallet and, the wider market.
Exactly. And our mission here is to go beyond just the surface level numbers. We're not just reporting analyst predictions. We want to extract the key insights from those expectations, look at recent performance indicators for Walmart too. What can this really tell us about the health of the consumer? Maybe potential shifts in the broader economy. That's the core of what we're digging into.
Okay, so the big question everyone's asking, what are the headline figures? The ones we should be bracing for when that report actually drops, EPS
Yes.
and revenue, right?
Right. So the current consensus among analysts, they anticipate Walmart reporting earnings per share of about 68 cents. And that's on revenue of $164.5 billion for this first quarter of 2025.
Okay, 2.58 and $164.5 billion. Now, just to put that in perspective, how did they actually do in the same quarter last year?
Yeah, good question. Looking back at Q1 2024, Walmart posted an EPS of $0.60, so a little higher then, and revenue was $161.5 billion.
Okay, so the forecast suggests, well, a slight dip in earnings per share, but revenue is actually ticking up.
That's right.
That revenue growth is roughly, 1.9% year over year. On the surface, that feels steady, but maybe not spectacular. What's the bigger picture here?
That's a really crucial point. That 1.9% growth, you absolutely have to see it in context. We've got, a cooling inflationary environment maybe, and there's this persistent uncertainty about how confident consumers are really feeling right now. So this revenue figure becomes a really, really important gauge. Can Walmart keep sales moving forward in this specific economic landscape?
Right, okay. So beyond those top-line numbers, EPS, revenue, what are the deeper indicators, the metrics that will really tell the story beneath the surface? What should we be watching?
Well, one of the most telling metrics is always going to be same-store sales. SSS, as they call it. In the previous quarter, Walmart showed pretty strong growth there, 3.8%.
3.8%. But I'm hearing whispers, or maybe it's more than whispers, that expectations for this quarter might be a little more subdued. What's behind that?
That's right, yeah. Current expectations are pointing to slightly more conservative SSS growth, maybe around 3.5%. But what's fascinating here is the anticipated split within that number. Analysts are predicting, more pressure on sales of general merchandise, think apparel, home goods, that sort of thing. But they're expecting continued strength in what you might consider the essentials, groceries, and health and wellness products.
Okay, yeah, that makes immediate sense. People prioritizing necessities when things feel tight. But is the extent of that shift, that pressure on general merchandise, more significant than we've seen before? What could that tell us?
Exactly. That's the nuance. The idea that there's potentially greater pressure on general merchandise, even with modest overall SSS growth, it does suggest maybe a significant tightening of discretionary spending. It might go beyond just inflation effects, could signal a more cautious consumer outlook than maybe the headline numbers alone would suggest.
Interesting. Okay, so what about the digital side? E-commerce, that's been a huge growth engine for so many retailers. What are we expecting from Walmart there?
E-commerce is definitely another key area to watch very closely. I mean, in the last quarter, Walmart's e-commerce sales saw a really significant jump, 22%.
22%. Wow.
Yeah. So if this strong trend of digital engagement continues, and particularly within their marketplace platform, where they host other sellers and also their growing advertising business, if that keeps up, it could be a very, very positive signal for the company's future growth.
Okay. Now, here's where things can get really tricky, right? Must-gens. You've got ongoing inflation, maybe some residual effects, plus the possibility of increased price competition to, lure in those value-conscious shoppers. What are the expectations for their actual profitability?
Well, last quarter, Walmart actually managed to increase its gross margin by a healthy 42 basis points.
Okay.
Which, 100 basis points is 1 percentage point, so it's a noticeable improvement. They attributed it to mix shifts, what they were selling, and just better control over their inventory. But the big question mark, the thing we don't know yet, is whether they might have used more aggressive price cuts this quarter to drive foot traffic. And if they did that strategy start to eat into those margin gains? That's the tension there.
Right. And when we talk about driving foot traffic, who exactly is that core customer we're talking about? What do we know about them in this climate?
Walmart's primary customer base, it really consists of value-focused households. And let's be frank, these households are currently navigating some significant financial pressures. So any shifts we see in their shopping behavior become really insightful. Are basket sizes changing? Are they buying less each trip? Are they coming to the store less often? Are we seeing a clear move towards, say, cheaper store brand alternatives? These kinds of changes can provide valuable early signals, signals about broader retail trends, and maybe even the overall health of the economy.
Okay, so the historical data, the recent past,
Yeah.
gives us context. But what about looking ahead? What should we be paying really close attention to in terms of Walmart's own predictions, their expectations for the future?
Yeah, the forward guidance, that is going to be absolutely critical. Investors, analysts, they'll be laser focused on any updates to their full year earnings per share and revenue expectations. You might recall their previous guidance for the full year EPS was in the range of $2.23 to $2.37.
Right, $2.23 to $2.37. And any change in that range, up or down, could really move the needle for market sentiment, couldn't it? Why is that forward look so vital?
Precisely. If Walmart comes out and announces an upward revision to that EPS guidance, well, it suggests they're confident. Confident in their future performance, maybe confident in the strength of the consumer. And that could act as a really significant positive catalyst for their stock price. Plus, we can't forget Walmart's sheer size and influence. I mean, it's a major player in both the Dow Jones Industrial Average and the S&P 500. The S&P 500 is like that report card for the 500 biggest US companies. So Walmart's report can have this ripple effect. It could potentially influence the direction of these major indices, especially since we have other retail and consumer-focused companies reporting their earnings soon after.
Okay, good point. Let's talk valuation then. How's the market currently pricing Walmart stock? What's the PE ratio telling us?
Right now, Walmart stock is trading at a price to earnings ratio of roughly 27 times its forward earnings.
27 times. And how does that stack up historically? Is that considered high or low for them?
It's notably higher than its 5-year average PE ratio. That average sits around 23 times.
Okay, so 27 versus an average of 23.
Yeah. So this higher valuation, it kind of suggests that the market might already be anticipating a pretty positive earnings report. Some good news might already be baked into the price, so to speak.
Right. So given that potentially baked in optimism,
Yeah.
what are the potential market reactions depending on whether they hit those numbers, miss them, or maybe even beat them and raise guidance?
Well, given that elevated valuation you mentioned, an earnings miss, so falling short of that door of upple 0.58 EPS or the $164.5 billion revenue estimate,
Yeah.
that could have a more pronounced negative impact on the stock price. Investors might adjust their expectations downward pretty quickly.
Okay, that makes sense.
Conversely, if Walmart not only beats those expectations but also raises its future guidance, that's the kicker. We could potentially see a rotation, investment rotating into the retail sector,
Hmm.
particularly into more defensive consumer staples, the kinds of everyday goods Walmart specializes in. In that scenario, you might see exchange traded funds, ETFs like, say, XLP, which tracks consumer staples companies. Those could see increased investor interest.
Okay, so to kind of bring it all together for our listener,
Mhm.
when that earnings report drops on Thursday, what are the absolute key things to watch for, the signals that will really tell the story?
I'd say the crucial signals to watch boil down to a few things. Continued strong e-commerce growth is one. Solid same-store sales performance, ideally holding above that 3.5% mark we talked about. And maybe most importantly, any indication of an upward revision to their full-year financial guidance. Those factors together would suggest ongoing consumer resilience. And they'd further solidify Walmart's position as, a dependable defensive investment in the current market.
Got it. And on the flip side, what are the red flags? The things that might suggest a more concerning trend is developing.
Conversely, any signs of weakening margins, maybe indicating that those price cuts really did bite into profitability, or a notable slowdown in same-store sales, especially if you saw a marked decline even in grocery sales, which have been strong, that could be interpreted as an indicator of a softening consumer environment. And that would have broader negative implications, likely beyond just Walmart hitting the retail sector and maybe the overall economy.
So what this all boils down to really is as we wait for Walmart's numbers, it's clear this is much more than just one company's report card. It feels like a potential window into the financial health of a huge segment of the American population. And the broader economic landscape, too. It reaches far beyond just the shopping aisles. It'll certainly be insightful to see what the numbers actually reveal. Thanks for this deep dive.
My pleasure. Always interesting.
And for you, the listener, as you digest all this, maybe consider this. How might Walmart's performance in its own way be a more immediate, maybe more tangible reflection of the average American's economic reality than some of those, more abstract macroeconomic indicators we often hear about? It's definitely something to think about.